Debt Management Office, DMO, seeks 450 billion naira through a bond auction on April 15th. Now, this contributes to their 1.8 trillion target for FGN bonds in the second quarter of 2024. The DMO raised 2.39 trillion naira in the first quarter, with interest rates reaching 20.45% in March. Now, recall that the Nigerian government previously used 4.83 trillion naira from Q1 2024 NTBs and Bonds to settle central bank advances. I'm now joined by Oladipo Ajayi, the head fixed income and forex at Chapel Hill, Denham. Thank you, Oladipo Ajayi, for joining me today. If you can hear me, can you hear me?
Thank you very much for having me on this morning.
All right, Joe, I can't really hear you very well, but I suppose you can hear me. So let's start. I guess that will get better along the line. Now, this is another one, another debt, and we're not sure, to what use this amount will be put. Should we be bothered at this point? Mr. Ajayi, if you can hear me, I'd like you to probably let me know. Okay, I guess we're having a technical issue right there. Well, we're talking about the DMO seeking to raise 450 billion naira from, bonds, definitely. If you can hear me, I'd like you to confirm.
Yeah, I can hear you clearly now.
Okay, so I was saying this is another one. Another money to be borrowed, and we're not even sure to what use this amount will be put. So should we be bothered at this point?
Well, sincerely speaking, this is still in alignment with what is in the budget for the year 2024. At the beginning of the year, the government drew the budget for the year, and on the budget sheet, we have budget deficit of over close to 9 trillion that we need to raise in the market. And out of that, about 7.8 trillion will need to be raised in the local market. And between January and now, the DMO has been able to raise about 2.3 trillion in the market. So it's just in continuation of the program for the year. So it's still not out of place. It's within the budget for the year.
Well, talking about that, I want us to pay attention to this particular one. That's because of the minister's statement where he was saying that the federal government allocated approximately 4.83 trillion naira from the proceeds of NTBs and, even bonds issued in Q1 2024 to settling of the ways and means advances from CBN. Now, for clarity, before we get there, I'd like you to probably speak to this because I had to raise this because of what you said. This is debt repayment, or even if it is debt settling.
Well, if you look at truly between January and now, the DMO has raised over 5 trillion in the short end of the market, and it's been clearly stated now that is actually to settle ways and means. And we all know that the current CBN governor has highlighted and made it clear to the government that he is not in any business of actually extending loans in form of ways and means to the government, except they can actually clear the outstanding ones or currently on the ground. And that's one of the reasons why the government was actually very aggressive in the market in Q1. And to be realistic, when you look at it from that perspective of what happened last year, where we actually had to add about 23 trillion to our total debt for the year. And with what is currently happening now, of course, it calls for concern because how long will we continue to actually use ways and means as a way to actually raise money? And at the end of the day, we ended up now accumulating debt through that window. And we'll then have to add it to the total debt of the country. So when you look at it from that perspective, it called for question and on that regard, that what is the strategy of government around that? But I think the kudos will have to be at the doorstep of the current CBN governor, who in his own might felt that no, he's not going to allow that to continue. He's not going to continue to actually extend unnecessary funds to the government. So by so doing, it simply means that there will be clarity around the fund being borrowed by the government. So it's not going to be aftermath that the people will not be aware of the outstanding loans that the government has drawn down from the central bank. when it has been fully utilized. So I think on the part of that is a good one. But when you look at it from the perspective that we continue to amass loan from market, from the central bank, of course, it calls to question to the fact that how long we will continue in this line, knowing fully well that in no time we will likely get to a level where we might not be able to actually service our debt obligation if we continue to throw caution to the winds.
Going, how close are we to that time? I remember what you said when I asked you the first question. We were talking about, this being in line with the borrowing plan, about what we have in the budget deficit and all of that. So, I mean, talking about the budget deficit or looking at the budget, did the budget specify that, a particular amount of this deficit or of this borrowing will be spent on maybe servicing ways and means and all that?
The ways and means is not actually part of the budget. So the area, that aspect that we spoke about, the borrowing from the treasury bills market is totally out of it. The 4.8 trillion that I was mentioned is totally out of the budget. It's not actually included in the budget for the year. Of course, at the point in time, the government has it at the back of their mind to continue to actually roll down on some of the obligations of the ways and means, but actually borrowing close to about 4.8 trillion in the market to service or to reduce the obligation of ways and means is not clearly stated in the budget for the year 2024.
All right, moving away from that, I want us to begin to look at some of those things. When we talk about bonds and all of that, the monies realized from bonds are actually supposed to be, used for infrastructure and mega projects. And some analysts have said, this is aimed at boosting the country's credit worthiness. But is that what it is, or are we probably postponing the doomsday? After all, we're even borrowing to pay back another loan. Does that look good to you?
I think the main thing is about what are we using the fund for. That's the main concern. And another thing also is our capability to actually service those obligations and also pay down as I went due. I think where I will be more worried is when we continue to amass debt and we are finding it very difficult to service an obligation. At that particular point in time, it tells you that we need to do more than what we're doing. And my view remains that when you compare our debt structure with other African countries or other some of our peers, it's not about the debt itself, it's about our revenue generating capacity. When you look at debt to GDP ratio, we are still around like a 40%, and that's one of the lowest among our peers in Africa and globally. But the concern is we are not growing revenue. Of course, we've heard this current government saying that they want to reduce our cost of servicing debt to revenue to around 45% compared to where we were last year. At the point in time last year, Q1 last year, we are around 98%. And so it is not about the debt itself, it's about the capacity to actually service the debt that actually matters. So I think we need to actually work around improving our revenue generating capacity as a country. And when we work aggressively in that regard, it will reduce the number of times that the government will come to the market to come and raise funds. And at the same time, it will also help the government to meet our obligation as a when due, rather than coming.
All right, you're talking about, how that revenue is actually very important. So we don't have to, or we don't get to see the government coming to the market every now and then. But looking at what's been happening so far, we see that government is beginning to use, higher rates, and these higher rates tend to attract foreign investors who are, of course, seeking better yields. And this, of course, leads to an inflow of foreign currency, which can help stabilize and potentially strengthen the naira. I mean, when we look at all of this, the policy stance of the CBN, these borrowings and all of that, some persons would say, what? I mean, on the one hand, we're sort of passing a message that, we're credit worthy. That's by paying this particular debt we're talking about. And then on the other hand, we are bringing in foreign inflows, and that, of course, is also helping to stabilize the naira and all of that. But really, for how long can we continue like this, knowing that when it comes to, the revenue side of it, we're not doing so well. And we also know the implication this has even for banks, for the private sector. Because when you mop up this liquidity that you're borrowing and all of that, I mean, the banks are probably left with not so much to give out as credit, to the real sector. What are your thoughts on this?
If found ourselves, we need to make a decision. And the decision we have made currently is to actually fight inflation and also salvage Naira. And I think one thing we also need to understand is that it's when we have a nation, that's where we are talking about this other aspect. We are seeing what's happening in Venezuela. We'll see what's happening in Argentina and some other countries like that, where they are currently battling aggressive inflationary pressure. And I feel that currently what the government is currently doing, basically the monetary policy guy, I think is the right thing to do currently. We need to first of all salvage the country. We need to first of all salvage the currency, and at the aftermath, we will now have to start seeing more like a moderation around that.
Mr. J, let me come in here.
Expressly stated there was a forward guideline in that regard at the beginning of the year, where the CBN governor, and coupled with the Minister of Finance, actually reiterated and made it clear that H1, they expected elevated rates in H1. And they said by H2, they feel that by then, I would have been able to stabilize the currency. And as at that particular point in time, rates will start dropping. And that is exactly what we expected to see by H2. As we speak currently, rates, okay, for example, the forthcoming bond auction, we don't expect rates to be as elevated as what we saw in the month of March, because currently we are seeing more of aggressive interest, both from offshore and also from domestic buyers in the market. So we feel that this will affect rates in the month of April, and we will not see yield, most especially on the 2034 maturity. We don't expect to see over 20.45 that we saw at the last auction. We expect to see rates to actually moderate down, maybe to around 20% at in the forthcoming auction. So by the time we get to H2, we expect rates to moderate, and that particular point in time, corporate organizations will now have opportunity to actually come to the market to be able to raise debt at a reasonable point. But as we speak currently, the main focus of the government is to salvage the currency and also to find a way to actually moderate inflationary pressure.
All right, let me come in here. There are some analysts who have talked about, the need for a balance. You're talking about, wanting to salvage the currency, wanting to ensure that we have a country. And on the other hand, there are people who are saying that, you just have to find a balance some way. You can't have the monetary policy tightening everything, making liquidity, making things difficult, for the real sector. And then on the other hand, you're expecting things to be fine. You also, I remember you talked about, sustainability really. How can we really sustain this? For how long can we continue like this? And everybody's talking about, very soon things are going to moderate. Is this a given? Will things just moderate, just like that, when we haven't necessarily seen so much from the fiscal authority? Just this morning, we're talking about Nigeria dropping from, being the highest producer of crude oil for the month of March. I mean, that doesn't speak good, of what we are doing from that end. What are your thoughts on this?
Like I said earlier, I expect moderation, and between you and I,
but we're not seeing it yet, are we? I mean, we're not seeing a corresponding action from the fiscal authority.
Yes, I agree with you. But what I'm currently talking about is about the monetary policy side. We're already seeing the impact of their decision. We have been able to see the impact of their hawkishness in the market. We've seen Naira actually climax on the unofficial market around 8,900. Currently now we're around 8,200, and this as a result of the aggressive decision of the monetary policy guy. And just like what you said, I agree with you that the fiscal policy guys also, they need to actually rise up to the challenges. And for now, a lot of people have not been seeing the full impact of the fiscal policy guys in the market. Like you mentioned, we expect Nigeria to increase oil production rather than to continue to actually reduce the level of production that we are currently actually pushing out to the market. It simply means that on a daily basis, let's even take a benchmark of like 1.7 million barrels per day as our benchmark. As we speak, it means that we are living close to about 500,000 barrels on a daily basis on the table. And this is not what a country that needs to actually salvage or aggressively salvage the economy it needs to do. We need to do more around that. And aside that also, because we don't also need to just focus on only revenue, oil revenue. We also look at a way to actually ease up exportation. The days of actually spending months before you actually get to export things from the country it needs to actually come to an end. We need to find a way, a seamless way where people can actually export products with ease, and also where the revenue of such exports will actually come back to the country so quickly. And that is some of the things that we need to do. And the ease of doing business, and some of these things are on the table of the fiscal policy guide. So I think that the part of the fiscal policy guide, I will not necessarily score them high on this regard. They've not been doing extraordinarily well. I think the impact of what we have been seeing in the market currently is basically the aggressive action on the part of the monetary policy guide. So the country is also waiting for the fiscal policy guide to actually step up their game to ensure that we can see the full impact of this policy on the economy. As much as the monetary policy guide is actually tightening, we expect policies from the fiscal policies guide that will help to actually reduce the impact on the general populace.
I'd like to say this because we're pressed for time. We're pressed for time, so I'd like to, put this in there. Now we're talking about development financing. I mean, have we seen this so far? There is this supposed 1 trillion naira intervention fund with about 500 billion naira for multi-sector funding, 200 billion naira for agriculture, 50 billion for nano businesses, and then the 200 billion naira for SMEs. I mean, has this intervention hit the economy? How soon do we need it? How soon is it going to hit the economy, and what will be the impact? That's on the one hand. But I also want to attend to something you said earlier, talking about, the monetary authority doing so well and stabilizing the naira. On the one hand, we have foreign portfolio investors who are coming in, and that's a good one. On the other hand, we have the naira also stabilizing, but then we also have depleting foreign reserves. What's the connection?
Yeah, if you look at the foreign reserve, let me correct that firstly. If you look at where we closed last year, the reserve closed around 32.9 billion thereabouts. And currently we are above, we're around 33.8 billion.
And we're at 34 at some point.
So normally you expect, one thing about reserve is not meant to sit there for decoration. Reserve is meant to actually, because the duty of the central bank is not just to actually amass the reserve or to continue to build buffer. When you build buffer, what do you use it for? What you use it for is that when there is need for liquidity in the market, you come in for intervention. And I've actually corrected it up in time on here that we are not currently running more like a full floating system. We are running more like a managed floating system. The managed floating system is a system whereby when the government sees that, or when the central bank sees that naira is heavily underpriced, they will step up into the market and actually push liquidity into the market to help actually stabilize the market. And that's exactly what we've been seeing. We are please don't let us expect to continue to see reserve increasing without us seeing liquidity in the market. That is nothing. That means the central bank is doing nothing around that. As much as you are building your reserve, you need to also continue to push liquidity in the market, and that's exactly what has happened in that aspect. All right,
thank you so much. We just have to we just have to end the conversation. Yeah, of course, you've made the point talking about the fact that what we have is a managed float and not a free float where we just allow market forces to take charge. At some point, the CBN is expected to come in and intervene, where necessary and all of that. Yeah, point taken. Thank you so much for your time.
You're welcome.
In today's fast-paced world, many of us are looking for ways to supplement our primary income. Perhaps you're saving for a dream vacation, building a safety net, or simply seeking more financial freedom. And after that, the current macroeconomic conditions in the country and the depleting consumer income. Well, joining me today to help navigate this is a financial market analyst, and by profession, he is the head of capital market at Interstate Securities. He is Vincent Oshoma by name. Thank you, Vincent, for joining me today.
Good morning. Thanks for having me.
All right. We see professionals, increasingly turning to diversifying their income to bolster their financial stability and career growth. Now, why is it important to either have, side hustles or even grow businesses outside one's professional core?
Yeah, generally it is acceptable that it's risky to depend on one source of income as a business the same as an individual because of the risk of losing that stream of income. So it's always advisable for professionals to look at increasing their sources of income to hedge against the risk of losing one income or as a result of economic vagaries
But I want to believe that,
affecting one source of income. And also, I think beyond just income, it's also good that are developing to tap into opportunities that are around you.
Great. I mean, what are the necessary things to consider before venturing into a side hustle or an alternate, business or something, alternative business? Vincent, if you can hear me, kindly confirm. If you can hear me, Vincent, can you please confirm?
I can hear you.
All right, I guess we're having...
Yes, I can hear you, but there was a break in transmission.
All right, okay. Okay, so I was asking you, what are the things to consider before venturing into a particular side hustle?
Yes, there are so many things one has to consider. But first, I would say before you think of developing a side hustle, you have to be good at what you are doing, your primary source of income. Otherwise, developing a side hustle can be a distraction. So you also need to plan the time that you devote to your program, the time you devote to that side hustle. Those things are very important. Another major thing you need to consider is that it's always best for your side hustle to be something that has to do with your passion, something that has to do with your interest, not something that you will need as much time that you devote to your primary source of income. You don't have to, because if you have a situation whereby your secondary source of income is competing with the time for your primary system, you may have issues, especially when you're an employee, and it may affect your productivity. So you need to be able to plan properly and also be able to program your time so you're able to know how to develop time for your side hustle. Then your passion and interest, so that it will be something that you can easily work with, not something that you have to do a lot. Then training is also very okay, because for you to be able to get some level of results in whatever you're doing, you have to do some level of training, understand the thing you are doing, get more information. I think those are very important if you're able to strive and succeed in that side also.
All right, so I want to ask you this particular one now. You talked about prioritizing passion, but then should we prioritize passion over pure financial gain? Because, I mean, there is passion, yeah, but what of going for something that you know actually has the money? When you're faced with both, which should you go for? Mr. Oshoma, if you can hear me.
Yes, I think I heard that there is passion, but what about going something that will bring you money?
Yes.
Is that correct?
Exactly, that was what I said.
So I think because one of the major goals of having a side hustle is to increase your source of income. So going for something that will bring you money is also very, very important. When I talked about passion, I'm not talking about going for something that you are passionate about. You also have to look at developing a business around the passion. They're looking at is that passion going to bring income for you, because you're not just doing that thing, you are doing it for the essence of increasing your income. So if it's something that you may be passionate, you are not able to monetize it, which is a keyword, monetizing your passion. If you're not able to monetize it, I don't think it's something you should consider as a side hustle. So when you're talking about passion, it's about monetizing your passion. being able to increasing getting income from your passion. So getting something that will give you income, because one thing beyond passion, you also look at opportunities. You can identify opportunity as a result of maybe shortage of supply in a particular area. You have identified some opportunities around you, and you see opportunity to make money. So you can build your skill, build a skill around that opportunity and to exploit it, get more information, build a business around it. It doesn't have to do with just passion, because I think one thing that gets people passionate is money. So when there's opportunities to make money, I think company can become passionate about that thing.
You actually made me laugh. I mean, I like that. I like what you just said now. Talking about, I mean, one thing that makes people passionate is money. I mean, well, having said that, I would like you to provide specific tips or strategies for professionals to effectively balance their primary job responsibilities with the demands of a successful side hustle. Because if you are going to be successful in that side hustle, you've got to give it time, you've got to give it your talent, you've got to give it so many things. So how do we balance this so you don't get fired at work at your 9 to 5 because you're not delivering anymore the way you used to? How do we balance it?
Yeah, I think the first thing one needs in balancing it is to recognize the fact that your primary business, your primary job needs your time. So you must prioritize your primary job. Prioritizing your primary job is very, very key, especially when your side also has not developed to the extent that is meeting your needs, your financial needs. So prioritizing your primary job is important. The second thing is planning. Planning will help you avoid having your side also conflicting with your primary job. So that is very important. Planning your schedules, planning your time is also very important. Planning and programming. And on that key thing is developing knowledge in that area in your side. It's not just to do a side, because sometimes you can start with a passion, but you need to grow knowledge about that area. It's not your passion may not be enough. That you have identified opportunity does not mean that you will succeed with exploring that opportunity. You need to grow knowledge, do research in that area, get more information, and also keep training and retraining yourself on how to make the best. Or another thing is that you need to reflect on gaps in that area, because when you are going into an area, one of the key things in succeeding in that area is identifying the gaps. So when you identify the gaps and you're able to plug those gaps, it's ensure that you become quite successful within a short time. Sometimes people call it primary mover. When you be a primary mover in an area, it ensures that one key for success. So I think these are very, very important in you being able to develop that side also. Your passion, planning, prioritizing your work, your planning and training, and also doing a lot of research and identify gaps. I think these are very important.
All right. Now, can we equate having, investments, maybe multiple investments, to having a side hustle? Can that also count for side hustle?
Yes, can be a side hustle, because you may not call it side hustle, but it will be a stream of income, because the primary thing is what guides side also is having a stream of multiple streams of income. So having an investment is one way to increase your stream of income, and it's a very good way, because it means that you are passively getting income. Your money is working for you, and that's also very key especially for those that are employees. Building a capital base whereby you'll be able to invest in various investment opportunities that will yield income for you, I think is very, very important. Not depending on your salary. And it's also key to, before you know it, because formation of capital is key. So savings, you start with your savings, setting funds periodically, then getting that money that you have saved into good investment that gives you good return. I think it's very, very important. No matter your side also, I think having investment is one key, because for most people, your side also, just like your primary also, we need your time. But when you have a passive investment that give you income even while you are sleeping, I think that's key to attaining financial freedom and also being able to meet your basic needs.
Absolutely. While you're sleeping, making money. Now, people have actually lost money in businesses or investments that had hitherto looked promising or lucrative. Are there steps to, identifying these risks and probably staying safe?
Yes, the thing about the risk is that there's risk everywhere. Being alive is risky. So when people talk about risks and investment, I think the thing is that most people they talk about the risk, they don't talk about mitigating the risks. There are a lot of risks involved in life. Being alive is risky. But what you do is that you mitigate the risks and you look at be able to analyze the risk level and mitigate the risks. Another thing is that some persons just follow the crowd. When they say something is risky, they don't have information about it. I think one way of mitigating your risk is getting more information to know how you can mitigate your risk to the level of risk, to properly analyze the level of risk, because there are different levels of risk. Like some person just believe that the stock market is quite risky. But when you get more information about the market, you know that not all investment assets in the market have the same level of risk. So it depends on your level of risk. You should be able to still be able to assess some investment. Like for somebody that is risk about, you still have some risk-free investment about the fixed income side that they can really assess, and for that we make them comfortable. But to just tag everything as generally risky. Another thing is, another myth is that a lot of persons just believe that there are certain investment that you need a lot of money to make. I always tell people that investing is not about the size. It's not about the amount. Investing is all about the culture. When you have a culture of investing, you can gradually build your fund capital. There are different investments that you can make, and you can build your capital to a stage where it will be giving you good returns. So it's all about having the culture or having the mind, having the interest in investing. That's the first thing, getting more information, and that will help in mitigating one's risk.
All right. I like what you said about the stock market and also the fixed income market. So for someone who probably wants to, invest in the stock market, what are the things this person should consider? I mean, I know you guys always talk about fundamentals and all of that. For a layman, really, what are these fundamentals to consider before investing in the stock market?
Yeah, before investing in the stock market, the first thing I will recommend is you need to go with a professional to get you the information, get you started in the market. And also, if you want to also go in yourself, you need to if you have the time, get a lot of information about the market. I think that will help you know what you are going into, because the first thing in investing is to identify the investment you are going into, because that will help. That's the first way you can reduce your risk, to know how to navigate the investor. I think the first thing is to work with a professional, get more information, and also grow the culture. Some persons get the information, they don't start. So starting is also part of the key. As you get started and time goes on, I think you get more knowledgeable about the market. Then in terms of investment, is that I used to tell people is that every investment has its pros and cons. They have all their different characteristics. So you have to look at what are the pros and cons on the different investments. And it is also good for you to spread your investment, diversify your investment. That is one way to hedge against risk, because every investment has its advantages and disadvantages. So spreading your investment in different asset classes, it helps you to benefit from the advantages of the various investments, and also hedge against the disadvantages that may come from some investments. The other investment may help nail of that disadvantage. I think that is very key. Working with professional, getting information and diversification.
All right, thank you so much, Vincent Oshoma, Head Capital Market, Interstate Securities. Thank you for your time and for sharing your thoughts with us.
Thanks for having me.
Millions of Zambians in rural areas live without access to reliable electricity, hindering economic development and limiting opportunities. We'll be discussing a new initiative, Demand Stimulation Incentive, and the ambitious 1,000 mini-grids initiative. Now, can this program bring light and opportunity to remote communities? Time will tell. I'm joined by the CEO, Rural Electrification Authority in Zambia, Engineer Linus Chanda. Thank you, Engineer Linus, for joining me today.
Pleasure.
Well, the Zambian government has actually unveiled this new financial mechanism to support mini-grid developers in accelerating the deployment of mini-grids through the 1,000 mini-grids initiative. Let's begin by trying to understand these concepts. What differentiates mini-grids from the traditional, or let's say the main grids, and why is the government paying attention to this?
Okay, thank you for that question. Mini-grids essentially are electricity networks that are independent of the national grid. So they are not connected to the national grid. And what drives that initiative is the fact that in most places in sub-Saharan Africa, extending the national grid can be very expensive, especially given the socio-economic factors in the rural areas. They may not, immediately you connect them to power, they may not be in a position to consume as much electricity as would give a return back to the traditional utility owner. So the mini grids initiative really steps in to try and manage that potential burden of denying people in the rural areas such electricity provision.
All right, let's talk about the demand stimulation incentive, which of course aims to incentivize connecting businesses and public institutions to these mini grids. What more do we need to know about it, and how is this expected to boost local economy?
So, I mean, if you look at any rural setup, and I think this is common in sub-Saharan Africa, what would happen is in the rural areas where they live, they would have very few equipment that uses electricity, essentially because they don't have electricity. So what we are trying to do through this initiative is to generate consumption of electricity. In other words, look at productive uses of electricity, such as irrigation, such as businesses like welding, like salons, and so on, to the extent that when these consumers of electricity are established, they would result in the financial viability of the mini grids once they are established. So what we have, this launch that has been unveiled, is essentially going to incentivize the rural communities to look at opportunities to consume as much energy as possible before the mini grids are established.
Well, how are developers, reacting to this? Are they jumping right in to take the opportunity, knowing that there is support from whether it is the NGOs or even the government?
Really, it's exciting. I think what we've seen in the last 2 days or so when we've been meeting and discussing these issues, we've seen quite a good number of potential investors, both local and international, who have come in to try and understand what this is bound to do for them. We've seen different equipment manufacturers who have come in to discuss the various options and what they expect to get out of this incentive. And indeed, a good number of people who make different solutions that are suited for the rural areas. It is exciting, and we sincerely do hope that the Zambian population will come on board in mass.
Just as you have said, GSI is expected to, accelerate the closing of current energy access gaps in Zambia and all of that. And apart from that, I actually asked that question because I know businesses exist to make profit. And so how viable is Zambia's rural economy, to the point where we're having investors, is it promising enough to attract investors? Are there other things like other infrastructure that needs to be in place so that we can even have more investors? I know you've talked about how excited investors are about this, but then, I want us to just close on this note.
I think we start from the understanding that electricity is a catalyst for development. So without electricity, there would be no development. Yes, we do have certain areas that really need certain infrastructure, such as roads and bridges, but these areas are inherently productive. They produce certain produces that could actually be processed to a certain resultant that would benefit the economy of the nation. So indeed, looking at the profitability or indeed the potential for development in the different parts of Zambia, the opportunity is huge. You may wish to know that the Zambian government deliberately in 2021 decided that they were going to decentralize constituency development fund. This is a fund which was originally managed centrally, and it would be directed to the different parts of infrastructure development in the country. But what the government has done is to decentralize this fund so that each constituency can decide what infrastructure development they want to undertake, depending on the prevailing conditions. And in terms of such infrastructure development to support the businesses that are going to come in, with this initiative, I actually foresee that it's going to accelerate the electrification and indeed the establishment of mini grids.
All right, thank you so much, Engineer Linus Chanda, the CEO, Rural Electrification Authority, Zambia. Thank you for your time.
Pleasure is all mine. Thank you.
All right, well, that's it on this edition of Business Edge. You can follow us on social media. We are at News Central TV. You can also go to our website, www.newscentral.africa. You can download our mobile app on Play Store and App Store. Till next time, that will be Monday. I am Perpetua Fasami Peter. Bye for now.